My name is Joseph Nakla. I'm the founder and CEO of Tribe Property Technologies. Thanks for choosing to be with me. It'll be 20 minutes of, hopefully at best, shedding light on what we believe is a great little company that we've built. And maybe at worst, just reminding you of all your negative experiences you've ever had with condo and strata and rental and your landlords in previous history. Regardless, our company is a company that started with software at its heart. We were a pure software company years ago. We started to build a software piece that solved problems for people that live in condos, digitizing it, allowing them through their phone to access all kinds of information about their community. We fell in love with property management. We thought it hasn't changed for about 50, 60 years, and we thought the complexity of, depending where you are, I know some of you probably from the US, you call it HOAs, homeowner associations. Those of you that live in Western Canada, we call it strata, and those that come from out east, we call it condo corporation. Regardless, it's the same concept of all of us own a single unit or a couple of units in a building, and some of us get elected to communicate on our behalf and make decisions on our behalf. So that kind of structure needed to be brought to the 21st century. So we built software to address that. Then we fell in love with property management. We actually went in to become Canada's first tech-backed services, which is a fancy way of saying we deliver property management, but we use our software and technology for it. Fast forward, 2018 was our very first building that we took on to manage with that model. Today we're almost 1,000 buildings into that journey. Since then, that represents about almost $46 billion of assets under management. And we're also now the third largest property management company in the condo space in Canada, a fully national, coast to coast. And we're the second largest rental management company in Canada. So let's kind of unpack it a little bit more and hopefully not make it too boring. So to start with, we're a unique asset. Obviously, nobody's baby is ugly, so we're here to tell you that our company is amazing. We're going to do mid-30s million in revenue, steady growth year over year, and we're trading at $80 million market cap, so people don't know our story. And because we are, for a while, we were a bit of a roll-up strategy, buying property management companies, improving the gross margin, and actually delivering more services to the residents in our buildings. We got caught into what everybody else was investing in, which is roll-up strategies that had no thesis. Unfortunately for them, they're no longer around. We've never been healthier. We've just turned the profitability corner now that we've built our national footprint, and our business is recession-proof, interest rate-proof, transactional-proof. Buildings that you're seeing everywhere need to be managed. Our technology allows us to do it at a much better gross margin than traditional property management companies, but more importantly, we're able to sell products and services into these homes due to the amount of data we have. And that is also illustrated in our revenue. As of today, 20% of our revenue comes from products and services that we sell on our platform to the homeowners, to the condo corporation, to the rental customer or the tenants and the landlords. We deliver the service on three big components of what we do. We have the traditional property management services. We compete directly with companies, and I'm just going to throw some names at you may be familiar with if you're in the condo space, like people like First Service Residential. It's a public company as well, so it's probably the Goliath in our space. There's companies like Associa. It's out of Texas, but it actually plays heavily in Canada here. And on the rental property management side, we are, as I mentioned earlier, we're the second largest there, and we compete against some of the biggest guys, like the Brookfield third-party spun-off products and stuff like that. So we compete with third-party. We don't own the buildings. We compete against third-party management companies in that space. And now the second largest in the country puts us at a very unique position to continue to grow that profile. So if you're ever driving around those big, massive communities, 2 big towers and big retail and some commercial and maybe some rental buildings next to it, we're now the company that's actually starting to win all of that business under one umbrella, and we charge different things for different services, but that's the kind of service solutions that we're doing. You might recognize some of the pictures I'm going to show you of some of the buildings that we manage. We play in multiple. When you think residential, most people think condos, and the other thinking would be rental. When we think from an MDU or multitude of units together, there's actually other places. There's actually single unit property management. This would be you, others, dentist, doctor will decide to own 4 or 5 different individual units that fall under condos, and they don't want to manage them anymore. They want to hand them over to another company to do that. We have a full engine for that. You can, obviously, the world of commercial real estate, and we're not a commercial real estate company. We don't go compete with CBRE. However, we have almost 2.5-3 million square feet under management. The reason I bring that up is because to let you know, when you watch those massive developments with all kinds of stuff, with some commercial and some retail, we have the digital solutions and the property management services to manage the whole thing, including the commercial services. And we're also becoming bigger and bigger in non-for-profit, and that would include, this may surprise you, but a lot of our cities and a lot of our provinces own multitude of residential buildings, and sometimes they manage them in-house, and you can imagine how well that's going. Or they go to a third party that's actually a little bit more bottom line driven, and we actually deliver that for them. We also do a lot of student housing as well, which is a vertical that's growing significantly here in Canada. For some reason, the US is becoming less desirable for students to go to. I'm not sure what it is, but you may know better. The way we deliver services is pretty straightforward. We have what we call the Home Pro platform. This is for those that have ever bought a brand new condo or about to be receiving a brand new condo. That's a platform that's designed for the developer to digitize the community and actually use it to kind of manage all the issues and the QA right through the process, including your walkthrough. If you've ever done it, it's not a great experience. You know, last time you've seen that unit was in the sales center. It was beautiful, and the salespeople did a great job convincing you it's going to be the most incredible thing you've ever invested in. Then you go in to receive it and actually close on it, and it's a very different experience. And as you're walking around, all you're seeing is issues, and there's a gentleman or a lady walking around sticking all the stickies on the wall. I don't know if you've ever experienced. Anybody experienced that? Okay, good. That's awesome to hear. That's how it works, by the way. If you ever bought a brand new condo, that's how it works. Until we brought in technology that actually allows this person that you're walking with to have an iPad and actually take the photos, annotate it, and actually start work orders right around all the issues that you're discovering. And that goes for you when you move into the unit and you start recognizing stuff. It's under warranty that should be fixed. There's 1, 2, 5, 10-year warranties. These are things that you actually, warranties that come in with your condo. All that stuff is staying on our platform, and you from your phone can actually open tickets, receive information about how to get it fixed or how it's going to get fixed for you. We have a platform called Tribe Home. They all speak to each other, but just to give you a perspective. So Tribe Home is this app that you end up downloading if you move into the building as a tenant, or if you move into the building as a condo owner. This app allows you to connect with your neighbors, allows you to get your financials, vote, polling, you get your packages, closing documents, long list of things. And then we have Tribe AI, which is basically a platform that sits down and benchmarks the performance of your building. So for those of you that have investments in condos all over, you might think things are going well because you bought it for X, it's worth more, hopefully, and your monthly fees keep going up, but you think it's the same because all your buddies are telling you the exact same thing. Reality is you don't know, no matter how smart you are. I'm a civil engineer, I'm not saying that's smart, it's definitely not, but I'm a civil engineer. I could sit on strata council and still don't know if my building is going well. Nobody has the tools to measure how well our building is doing in a whole bunch of categories. And what I can tell you is we've built an application that actually runs out and looks at the performance of every category, how much gas per square foot you're spending, how much you're spending on electricity per square foot, how much you're spending on labor for the building, all that stuff, and benchmark and measure it against other buildings that are in your neighborhood, but doesn't benchmark against buildings that we manage, benchmark against buildings that are managed in the population. You might be wondering, how can I do that? How can you get that information? Every building that sells, every unit, every home, condo that sells in a building must come with a package of data that speaks about the health of the building, financial reporting. That data gets accumulated. We run per square foot our performance compared to those populations in a similar buildings and actually identify how well we're doing. So how amazing is it for you to be sitting on Strata or HOA, and your property management company or your property manager that works for Tribe comes to you and says, by the way, we are out of whack with our gas per square foot consumption here. We don't know why, but this is going on. Look how you compare against your peers in the neighborhood, and let's go figure that out. Or you're doing really well on that side of it. Your electricity consumption is really good. So that's what we do. That's a platform that we've got. Fourth component of what we have is probably our most exciting revenue generating component is we know in the case of condos who lives in the unit. If you're married, you have kids, you have a pet, we have a payment relationship with you, we have all that information about you. And then in a case of a tenant, we have social profile, we have obviously a financial profile because we had to qualify you before you rented the unit. And we also know where you work, how much money you make, all that stuff. We have the ability, since we have a relationship with you digitally and we're the property management company on record, we have the ability to put products and services in front of you that make sense for you. So if you don't have any children, maybe we don't put products that make sense there. But if we know that you're not insured or underinsured, we'll put a product in front of you to tell you that you should be buying these types of insurance. Here's 3 different underwriters, choose your best. In the case of a homeowner, in case of a tenant, we can also deliver you products and services that make sense for that neighborhood. We know where you live, obviously, but we also can maybe make some soft recommendations for you because of your high profile revenue generating. We know where you work, we know where you live now. Maybe you should be considering buying into this pre-sale that's going to be ready in 2 years, because that's a partner developer of ours and it will cost you less because of your relationship with us. This world of products and services, we call that partnerships or digital services, represents almost 20% of our revenue. Some of it is financial services, some of it insurance based. We just announced last week, we have the country's very first product. It's a certification, a digital marketplace, a digital certification, document certification, where I live anywhere in the country in a Tribe building. With a click of a button, I can receive in real time a digital package that represents all the information I need to get an appraisal done, to get a refinancing done, or to sell my unit. This is a package by law you're supposed to make available if you're selling the unit. We charge you for it. Historically, this would have taken you 3 weeks of 15, 20 calls chasing people to get. It comes in real time, and it knows where you are, so it actually looks at the different regulations in the market. Not to impress you again, just to kind of make the point that when you have that data available to you, you can actually start stacking some really interesting products and services in front. It's complicated. That space is complicated. Those buildings are complicated. The stakeholders. So when we built our software, we had to contemplate every single person. And I'm not exaggerating. There's actually more stakeholders than you're seeing here. We've got people that work in the building. We've got concierge. We've got caretakers. We've got security people that manage that. We give all those people access to our platform within the view and the lens that we want to make sure that makes sense for them to be able to deliver on. And all of that, all these opportunities are monetizable. That's what makes us very sticky in the buildings that we manage. Here's some examples of communities that we manage. Again, the point there is to not say, look how amazing those buildings are. There are some iconic buildings, obviously here in Toronto, that we manage in Alberta, but there's also very small buildings, very small communities. Our solutions are not exclusive to the higher end stuff. Yeah, we have a lot of them, but those 55,000+ homes that we manage are not all high end condos. We've got stuff that, yes, $3,000-$4,000 a square foot to buy into them, not anymore, but in that neighborhood. And then we've got stuff that's in the hundreds of dollars a square foot to get into. So what I'm trying to tell you is our kind of addressable market is really anything that's stratified, anything in the MDU space. We have grown organically, and we have also grown by making acquisitions. I mentioned earlier that we rolled up property management companies. Just to give you a perspective, there's about 1,500 property management companies in North America, in Canada, and the US. Now they do different things, but generally to put them under residential property management, that's how big that pie is. You probably, till I said to you Associate and First Service, you probably couldn't name any unless you lived in a place where there's a brand or a logo that you see all the time, you go up and down. That's how fragmented and behind the scenes these companies are. They manage $120 billion of cash on behalf of these buildings annually. That's $120 billion being spent to maintain buildings that fall under the strata or HOA or the condo space. So it's the largest vertical that you've never thought of. I assure you that nobody woke up and said, you know what would be amazing is making money through property management, simply because it's low margin business. It's very sticky. It is cash heavy, and it generates cash, and there's no capital expenditure requirement for it. So that's all good. However, most people don't understand the value of it because it is really usually day to day. I go in, I do the work as a property management company, I come back, I charge once a month, and there's no data that I'm using. I can't monetize. That's the problem. And that's where we think that's a massive opportunity. And we have the data to prove that we've changed that. And that's best example of that would be as basic as when we first embarked on this, we were doing about $20 per month per door generating revenue. We were adding maybe another $2 ancillary services, products and services on top of the 20 that we were generating. This last quarter, we're going to be in the neighborhood of about $40. So we've been able, through just putting more technology, understanding who lives in these communities, making products and services that these communities really need available to them, accessible and easy to transact with, and then you can drive that flywheel from there. So our M&A strategy is pretty straightforward. We like to buy specific multiples, these particular businesses with quite a bit of history behind them. We bring them and put them in. We digitize all the communities in. We do not go in and raise prices on the customers. What we actually do is give the customers an opportunity to realize how we actually steady their expenditure. What's the number one complaint anybody that owns a condo is? My God, I moved in, it was brand new, I was loving it. It was one bedroom, $500 a month in maintenance fees. Fast forward 3 years later, I'm up to like $700. I don't know where the hell my money is going. Everything is going sideways. There's big projects. This is not working. That's not working. And that's what the hell is my property management company is doing. That is the thesis. So envision now, we come in, we take a company where you may not have great feelings about, companies that we buy, right? You may have, if you had to grade them, maybe it's a C. We take them in, running a 30% gross margin. You don't know that, but we just take them in with 30% gross margin, bloated, but steady income, decent EBITDA, and then we take that and put it in our engine. We immediately tell you as a homeowner, congratulations, your company's been bought. You probably didn't love them. Give us a chance. Here we go. We're going to digitize you. Download this app. There's no extra fee. By the way, we're going to benchmark you and tell you how well you're doing as a building. There's obvious issues you need to be fixed because of the data we have. Let's go fix these things and let's see how we're doing in a year. And what we do in a year is we increase the fees, or we bundle the ones that we don't think are going to work and move them on. Literally, we take these buildings and tell them we're going to terminate them and move them on elsewhere because they don't fit in our gross margin. 50%, 50, half of the buildings that we fire call us in 6 months and say, we want to come back to this new model that you showed us in the last year. Because they recognize it's all about capital expenditure, making sure their money doesn't get, wasted. They can go somewhere else where it's a lot cheaper to pay for property management, but their actual overall operating expenses are going up, and that's a problem for them, and it's especially when the buildings are not delivered. We take these businesses from 30%. Our population now collectively as a company is running at about 41, 42% gross margin, and then we actually unlock additional revenue streams digitally, so we start selling more product and services there, and then we just keep redoing it again by generating cash and actually redeploying the cash in further acquisitions. I mentioned earlier that we have this model whereby we have the recurring software and services business. This is the fees we generate from being the property management company for the building, and this is monthly recurring. It's very, very sticky business. And then we have this additional long list of products and services where we can actually sell into the building. We try to limit this to these type of stuff, but we actually have literally hundreds of different ledgers associated with the revenue streams that we can generate. This is my way of just kind of showing you numbers. What I said earlier, we started with the $20 plus $2 transaction fees. We were at the 30 to 35% gross margin. We were just like everybody else. And then worked our way. You apply your technology, you digitize, you put the apps in there, you bring in third-party partners, and you really bring that community into the 21st century in terms of the technology that you can allow, give the community more access to the decision making that's needed. And as you'll see in our last quarter, we're running at that $38, almost $39, with an additional $10 of transaction fees and 44% gross margin. Just some examples of products and services that we keep adding in there. I spoke to you about our buildings are healthier. I mean, you can take my word for it. It could be a vibe, but it's also better when it's data driven. So in black would be what we call the population, your peer population, and it's not manipulated. This is third-party data. So my point there is you live in a building in Yaletown. This is obviously locally here. And you've got a whole bunch of very similar buildings in Yaletown. That's what you're going to get compared to in this data. So we're not going to compare the Shangri-La here from another downtown tower in Surrey and go look at the data difference. That's not what we're doing here. This is really apples to apples. And you'll see, energy per square foot is lower in our buildings. Revenue from reserve funds and other financial services is higher in our buildings, much higher in our buildings. Insurance per square foot is much lower in our buildings. I'm talking about the policies themselves. And that goes a long way. And if any of you own any in condos, that is the number one big topic issues for condos in the last 10 years in BC. And that problem is unfortunately being exported now externally, meaning Alberta is starting to see it. Alberta has other dynamics, especially with the floods that they had. But Ontario now is starting to really, really see it, where a lot of the underwriters are starting to have issues and fees are starting to skyrocket. And then we have the admin per square foot costs. That is 100% related to the fact that we have the app that really solves a lot of your daily activities. It answers you, gives you all the questions that you have. So administratively, it's not as expensive in the big AGM. If you're ever, I don't know if you know this, but buildings have to run almost like a corporation. They are a corporation. So a lot of AGM documents have to be sent out, mailed, a lot of voting, proxies, all that stuff. All that stuff is digitized in our world. So you don't need to be charging you for that. We can charge you for other things, but that's not good use of the funds in the organization. This is our Canadian footprint. We have bought companies in multiple of those markets. They're all rebranded and integrated. And then we've got aspiration to go into the US. However, we'll be very selective in what we want to do there. What's important for you to know is for Tribe to be successful, we don't need to be in every state. We don't need to be in every province. We don't need to be in every market. What you're looking at where those little dots are, where the little hearts are, that represents more than 90% of the addressable market. We like density. We operate in density. So when I said to you $120 billion in HOA fees and condo fees, in those markets, not in the rest of it. The rest of it is actually pretty it's going to get there. Like in 20 years, I think this is going to look very different. But that's the reality of our business. We just want to focus on density. We have tremendous success in that market. We do very well with the complexity associated with that density that occurs. Here's some examples of companies that we've acquired. Like I said, a lot of those companies you will not have recognized because a lot of them, there just happen to be a logo on the buildings that you visited or you live in or you rent from. The model, as I mentioned, really straightforward. We like to look at assets that are cash generating and EBITDA positive. We know we're going to improve its EBITDA profile due to our back office. We like them sometimes because we like the geography they're in. So we may not love the brand, we may not love the company, but we like the geography they're going to allow us to land in. We usually contemplate, do we land our own brand into that market and build infrastructure from scratch, or do we just acquire it? The truth is we like to do the latter, but sometimes we're forced to go into a market, just put the flag up, and that kind of is a gentle reminder for existing players in the space that we are open for business, looking for assets, and does usually yield leads for us to follow. So we're kind of open to all the above, but we're always looking for acquisitions. We've done a couple of 2 to 3 acquisitions a year for the past multiple years. So we spoke about what our focuses are in terms of being profitable now, but you'll see here on the negatives in 22 and 23, we were all hands on deck trying to build infrastructure nationally to be able to compete against First Service and others. There are $11 billion in market cap. The 2 bigger condo players in the space, one is $10.5–11 billion, and the other one is $4 billion. And so we needed to go and build that infrastructure to compete directly with them. Plus, we've also built a full engine, which is almost representing 50% of our business. 4 years ago, we had no big rental asset management business, and now it's almost half of our revenue. And we don't compete with First Service and Associate for that. We compete with other players for that. So now that we've built this, we're starting to see the EBITDA improvement because we're backfilling into the national size that we're we're in. We're backfilling in revenue. We're also backfilling in gross margin because we're starting to see the opportunity to rationalize a lot of our basic efficiencies. I'd say we're only halfway through the journey of rationalizing these efficiencies, but that's where we are right now, and pretty darn excited about the profitability model that we have set up for the next 2 years. So what we did quarter over quarter, Q2 over Q4, you'll see improvement in revenue, you'll see improvement in our gross margin, and obviously improvement in our adjusted EBITDA. What's interesting is we've had 3 quarters of positive EBITDA. There's a 0.04 negative there. That's a function, to be honest, on direct, a slight seasonality and a few buildings that have not completed in that quarter. It got pushed out. The reason that's relevant is because I have to hire and be ready for those buildings. I got to digitize them. I got to get them ready. But if they're not completed, I don't start seeing the recurring revenue for another 30 days or 60 days or 90 days. So that's one of the challenges and inside ball in our business. So we're focused on AI. Who isn't? Of course, you're not a company if you're not focused on AI. So I'm here to tell you, yes, AI is a thing. It's genuine. But I'm also here to tell you we don't use it as a buzzy word. We have 3 areas of AI that we focus on. One area that's well on its way. We think you can build software quicker with AI. I know that's ironic and a real thing, but we can measure that this year in 25, we're about 30% more efficient. We're able to push products and services. Some are monetizable, some are just service delivery improvement to the customer or our tenants. So we're actually at this point at 30%. I'm guessing by next year we will hit the 100%. I want to say I'm saying Tribe, but I'm also thinking collective software engineering world. I think it's going to get to a place where 10 software engineering team, what they deliver now is 30% more than they delivered last year, and next year will be 100% more than they delivered last year. I was joking earlier about choosing to skip software engineering as a program, and you're better off in mining engineering. It's never been more true than now. I'm a civil engineer, and believe me, for years I thought I was an idiot. I should have gone into software engineering. This last year was the first year I started to think maybe I wasn't stupid after all. This is not a knock on software engineers, by the way. I'm just saying that's the reality of it. We're going to need less of us. This is the reality. The second component of AI that we're heavily involved with is monetization of the data stacks that we have. We know enough about the behavior that's going on in the buildings. We can obviously improve our operating profile. We can improve our gross margin because less hands need to touch workflows, whether it's capital expenditure projects, whether it's something as basic as supporting a customer instead of having to pick up the phone and talk to 2 or 3 people. A lot of the heavy lifting can occur. So there's the agentic component associated with that, but there's also a massive opportunity to really figure out where we can actually generate more revenue from these buildings, and we're starting to see that. Be very quick here. Maybe I'll just pause this addressable market, and I'll tell you very quickly about our cap table. So myself and our CFO own about 10% of the company. Insider Propeller Group, which used to be called Round 13, represents about 17% of the business. TY & Sons, 6% is one of our long-term shareholder, and Peterson Group is about 3%. They're the guys behind the Shangri-La and what have you. Finally, strong organic growth, big M&A pipeline that goes into the flywheel that generates more revenue and accretive revenue for us. And we'll continue to innovate and put more products and services, hopefully, that either touch you directly or indirectly for you and your families. And I just want to put it out there. If you are ever in a situation with a condo and you have any questions about it, just figure out where we are, get a hold of me. I don't have much smarter people than I am to be able to answer some of these situations because the dollars are getting much bigger and bigger and the stakes are much higher for that space. So at worst, we're happy to help you with your home situation. So.